So welcome students to this particular session of the case laws applicable for the upcoming June 2019 and November 2019 attempt. Students, in this particular entire case law segment, we have considered the very important 57 case laws which all of you are supposed to know for your examination, and primarily the very fact that the entire scheme of the examination now has undergone to a drastic change. My assessment of the case laws that can be tossed up in the examination either for the old course or for the new course for paper number 7 could be in respect of a 3 to 4 marks question. Individually they may target these particular case studies, or some of the case studies they may target even in the form of some practical questions. Like for example, even the MCQs pattern that is there right now is allocated for 1 and 2 marks respectively. Primarily ICI has given an instruction in terms of that the 2 marks MCQs that would be allocated shall be majorly requiring the students to calculate those particular questions that are being there, meaning thereby some sort of an adjustment or some sort of the practical aspect of a particular situation is what they are going to target in that 2 marks question of the MCQ. So this case law segment which is there, that 57 case law that we have made, majorly what I strongly feel is to an aspect that can be targeted in the examination. Number 1, they will be dedicatedly targeting these case laws only for the case study, the way the case laws are being targeted so far up till now. And the another aspect can be towards what? Towards the MCQ based question. Some of the practical aspect of the case law, they may take up that, and primarily they will keep it for you to judge. So on those particular note, you will have to prepare your case studies and you have to do it a very thorough job. So students, what I have done, these case laws, if you primarily have a look. Now first of all, I'll tell you there are case laws which I will just show you in the slide, and this is what primarily I have. This was actually a color font, but I have made it in a black and white form for some of the students who may wanted to take a printout of the same. See the kind of the case law structure, if you can just go through it. The major challenge that the students have experienced is about how to remember the case laws. Now students, as far as the name of the judgment is concerned, that is not a necessity that you may have to remember the name of that particular judgment. However, it is always advisable that whenever you go through these particular case study, always make an attempt to go through the name of the judgment. 90% it will be a case where you will be in a position to remember the name of the case law as well. And if you can do remember and you can write it in your answer sheet, then I may say it will be an icing on the cake. So the cake is the case law itself, and the icing over it is the name of the case law. So therefore students, be careful on this particular part. So what I have done, just to ensure that the students can remember these case law, number 1, plus they can recollect the essential points in that particular case law. These 57 case laws, now I have made structuring like a header we have prepared of the issues which are involved in those case laws. I have seen that going through all the list of the case law, I could easily find out that the issues which are there in many of the case laws are overlapping. They are common issues, although the facts of the case are different. However, as I told you, the issues are uncommon, and they are all common to each other, and because they are common, therefore what I have done is that I have made a particular segmenting of the same. See, you can just have a look to this particular part, wherein you can just have a look here. Person doesn't have the right to receive the income. This is the theme, or this is the issue on which these 2 judgments are based upon, Henkel Spic India Limited and UCO Bank. Similarly, classification of income from case law number 3 to case law number 14, we will find that these are the segment of the judgment which are in respect of the classification of the income. So the facts, as I told you, would be different, but the theme are the same. Thereafter, the next theme is issue on the waiver of the income, 3 case laws on that. On mutuality, 2 case laws. Thereafter, issue arising on the raising of the finance, like share being raised or the debentures being issued. So what are the various case law which are being reported? 3 case law again on that. On the deductions front, there are these judgments. Issues on profit link deduction, trust taxation, exemption, status of the SSC, assessment proceedings and the power of the income tax authorities, revision, appeals, recall and review, settlement commission and surrogate taxes. So by virtue of this, an attempt has been made so as to make your job easy to remember these particular 57 case laws. Don't take any chance. You have to prepare for these case laws come what may. And since you have an ample time to do so, my humble advice to all of you would be to go through them carefully. Now students, many of you primarily may not have this particular, the sheet itself which is there. Now we are putting this particular case law sheet to our Telegram channel. So those who want to have this particular case law segment, do join our Telegram channel. In that, this particular PDF file, you're going to find this particular case law segment. So the PDF file which has been there, you will be finding it in the case law segment. So I'll just give the name of the Telegram channel herein. CA Durgesh Singh. This is the name of the Telegram channel. All of you ensure to just join them so that, and there is no space in that. There is no space. Be careful on that. So CA Durgesh Singh is a continuous particular, the letters that you're going to type. In that, you find that particular channel, join it. I would have put this particular PDF file for all of you. Let's then begin with this particular thing, part 1A. This is I'll just break it into 2 parts, 1A and then thereafter 1B. So 1A students. Now in this particular 1A, which is there, in this context, we will go sequentially one by one all the case laws and what are the key points that you are supposed to remember, the key points in these case laws. That particular points you are supposed to ensure to take a note of it. So just ensure to have your notebooks and your pen ready and let's try to go through this particular case law together and wrap it up. Very important particular area which can determine your fate so far as this paper is concerned. The first one, students, so what I have done, students, now somebody will ask that what was the basis of you choosing this 57 case law? Even that is a valid question. So the very basis of choosing this 57 case laws are, these case laws hasn't been targeted by the ICI in the examination. And some of them happens to be the most landmark judgment. So technically there are 2 particular bases. So these case laws has to be known to all of you because they are something which the ICI hasn't taken that into consideration so far in their previous attempts. So in that very case, these are all likely for your examination purpose and hence their importance. So let's begin with it, students. The first one, Henkel Spec India Limited. Now some of them primarily I will tell you to read the facts of the case. So while that particular judgment would be going on, the facts of the case, you will be supposed to read those particular case. I think Henkel Spec India Limited, all of you are aware of this particular case study. What was the facts of the case in this? The facts of the case, students, was in this particular judgment, the SSC company had issued a share capital. It was an IPO. On that, the share application money was being received. The share application money was being received. Now, pending the allotment, the SEBI law requires the company to put that particular money, which is the share application money, in the trust account. So in the trust account, that particular money would be kept. And what has happened? In that particular account, the interest got due. So that particular account, the interest portion got due, and because the interest portion got due, the question therefore came up was this, that whether the interest will be chargeable in the hands of the company. Be careful, students, the company hasn't yet made the allotment of the shares. The company has not made the allotment of the shares in that particular previous year. So, but nevertheless, the amount was already being kept in that trust account. The interest got due in that particular, got accrued in that particular account. So the assessing officer, what he did was, he tried to tax that interest which got accrued in that account in the hands of the company, although the company in that particular previous year has not made any allotment of the shares. So the issue that came up was whether the action of that particular AO was justified, and the answer was no. The answer was no. I think all of you are aware of it. See, how I have done is that, primary students, you can write anything and still you will have the same conclusion. You can write any particular thing, but still you can have the same conclusion. But in doing so, you will not be getting good marks. You have to write, at least if not verbatim, that is word by word. You may not be expected to write word by word, but at least take up that particular direction of the analysis which the court has adopted in deciding that particular case. So what was that particular theme? What was that particular analysis which the court has made? You have to use that analysis while you conclude your answer. As I told you, you may try to use any other reasoning and still you may get the same answer, but you may not get the marks for that. You have to ensure while you write the answers on the case law, you will pick up those particular reasoning or the analysis which the court has taken up while coming up to its conclusion. So here, students, primarily the facts, brief facts of the case has been given to you, what I have just now discussed with all of you. Issues that have been raised is this, that is to say, that particular income which got accrued in that particular account, will this be taxed in the hands of the company under the head IFOS or not? So the relevant provision also is being told to all of you as to when the interest income is chargeable to tax, and then thereafter the analysis. This is actually the format. What we are expecting now with the change in the format is this, that you may not be allowed, or you may not be getting to write the answers completely in the format form, but still up till last attempt, the ICI required the students to write the answers in the format. In the format, students, they have allotted half marks for the issues which has been raised, 1 mark for the provisions which are there, 2 marks for the analysis, and finally 1 mark for the conclusion. Sorry, half mark for the conclusion. So this is the marks allocation that they have made. So on that note only we have made the bifurcation. Now as I told you, the big chunk, anyways, people will write at least the provision. You may in fact under 56. I will also tell you which case law, what will be the real botheration to the students. So try to remember that aspect of that case law. As I told you, in this case law, students will write 56. They will write the same particular provision even just by reading it once. It may not be a big challenge. So in some of the case law, the provision may be a challenge. So I will let you know that, okay, keep your emphasis on that particular provision. In some of the case law, the analysis would be a challenging factor. So either of the two, either it is the provision or it may be the analysis. Issue which has been raised can be easily be deciphered from that particular question that they have drafted. So you have to draft the issue that whether the interest which has been accrued on that particular amount which has been deposited will that be charged in the hands of the company in the previous year, although the allotment of the shares has not been made? So that is what you may have to write in your own words. That is not a challenging factor. So in some of the case law, the provision may pose a challenge. In some of the case law, the analysis. So what I have done is that herein, like analysis, what I have dealt is that I have created the headers, and you are supposed to remember, if not the content, but at least the header. If not the content, but at least the header, so that your analysis is in the track. So your track of the analysis is the same way, the way in which the court has given the analysis in that particular judgment. So if you see here, what they say in the analysis part, that the interest earned on deposit cannot be regarded as an amount available to the assessee for its own use until the allotment of shares got completed and money are returned to those whom shares are not allotted. This is a general observation, that look, unless you make an allotment of the shares, that particular amount of interest cannot be said to be available to the company. And if tomorrow, on account of oversubscription, there can be a situation wherein the interest amount may have to be refunded. The share application money along with the interest amount has to be refunded. They have supported this in the next paragraph, right to receive. So, till the allotment is made, neither the company has the right on the principal portion, nor the company has the right over the interest which has been accrued. The company cannot utilize that particular fund, neither the principal nor the interest, till the allotment of the shares has been made. So this is what, in a brief sentence, you are supposed to conclude, that until the time the allotment of the shares has been made, the company has got no right over the principal amount, which is the share application money, as well as the interest which has been accrued on that particular application amount. So this is what it is, and therefore in that previous year, when the company has not made the allotment of the shares, the assessing officer taxing that particular interest income in the hands of the company is not valid. This is your conclusion. So this is how, students, step by step you're supposed to go with that. So here, in this particular context, what you will take into account is the analysis. As I told you, in this particular case law, the provision part will not be posing any sort of challenge to all of you. Okay. Now, before we proceed, students, ICI in the month of February 2018 has given a list of 10 new case laws as well. So they have given the list of 10 new case laws. Those 10 new case laws are also being captured in this particular entire segment, and it has been classified appropriately. See, I'm telling you one thing. It's not that the students don't read the case law. I've seen it. Our students in the last attempt, up to last attempt, from 16 marks, they have scored 14 marks. It was because of the meticulous approach they have adopted in their examination. However, I have also seen students scoring 4 marks, 5 marks from that 16 marks. Some of the answers has gone completely out of proportion, and some of the case laws, although the conclusion may be right, the name may be also right, but the way they have arrived to their conclusion, as I was telling you, the analysis is the soul of that case law. It is the soul of that case law. If you don't put the proper analysis to that particular case law, you will not get good marks. Be careful on that. UCO Bank. This, students, is in respect of TDS, but the theme, as I was telling you, is the same. Now what exactly it is? So here, students, was a case where a court has given a decision to put the money in a particular account which would be in the name of the registrar general of the High Court. So the case was before the High Court. Some dispute was there between the bank and the SSE. So pending that judgment, the court directed to deposit that money in the name of the registrar general of the High Court. Once the decision would be given, once the person who would be the rightful entitled to receive that amount would be decided by the court. That point of time, the money would be given to that particular person. But till the judgment comes into picture, the court has given the direction that the money be kept in the account of Registrar General of the High Court. This was what the court has given the direction. The case was pending before the High Court. Now what happened was, in the name of that Registrar General of High Court, the amount was being deposited, and the fact that the amount was deposited in the bank, the interest amount got accrued. Again the same thing, the interest amount got accrued. Now students, you may be aware of there is the TDS angle on that particular fixed deposit 194A. There is one section which requires the payer of that amount to deduct the TDS, isn't it? And if there is a failure to deduct the TDS, then in that case the assessee will be considered, the payer will be considered to be an assessee in default. So the payer was UCO Bank. UCO Bank, in that account which they have made in the name of Registrar General of High Court, the interest got accrued. They have not deducted the TDS because the case as such was pending, and the fact that the case was pending, High Court has yet to give the judgment as to who would be the rightful claimant of that particular amount, who will be the person who will lay a claim over that particular amount. So that particular aspect was yet to be decided by the court, and therefore although the interest got accrued, the bank has not deducted the TDS. The income tax officer in the meantime gave a notice to the bank, making the bank as an assessee in default, suggesting that on the interest which got accrued in this FD account in the name of Registrar General of the High Court, non-deduction of TDS will make you an assessee in default. This was primarily what was a objection of the income tax department, and accordingly the judgment came. And what was the judgment? The judgment said that, look, for the purpose of TDS, what is required is the payer and the payee. Who is the payee? Payee is a person who has got the right to receive the amount. In this particular case, pending the judgment of the High Court, that particular amount is kept in the custody of the Registrar General of the High Court. The amount is kept in the custody of the Registrar General of the High Court. So we cannot say that the Registrar General of the High Court happens to be the payee of that interest amount. The payee would be the person whom will be finally be adjudicated by the High Court at the end of their judgment. When they will do the adjudication, they will be the person who would be considered to be the payee. Judgment is yet to come, and hence the non-deduction of TDS is valid. The payee is not yet known to us, and therefore the question of payer deducting the TDS will not arise. So if you see here, students, again the provision of 194A will not pose a problem. What exactly is required is the analysis. Now you can remember more or less the same sort of analysis the way you have dealt in Henkel spec will be required. What they say, credit of interest. As per 194A of the Act, the bank is obliged to deduct tax at source in respect of any credit or payment of interest on deposit made. The expression payee under section 194A would mean the recipient of income whose account is maintained by the person paying the interest. So who is the payee? Payee would mean the recipient of income whose account is maintained by the person paying the interest. That is the person who would be considered to be the payee. Actual payee is not ascertainable in this case. The Registrar General is neither a recipient of the amount nor interest is accruing to him thereon. The person to whom the fund would be paid would be ultimately determined by the order of the court. So this precisely was the judgment in the context of the analysis that they have done, and finally the conclusion. So this is how the entire judgment, students, was being delivered. Now we are dealing with the classification of income. Students, understand one thing. In the classification of income, primarily the classification of income, there are approximately, we are having 4 or 5 judgments in this regard on classification of income. Now, in this context, if you see the importance of classification, I'll just give you a particular food for thought. Importance of classification under the income tax law. Importance of classification under the income tax law. So here is a case of 1, in computing the total income. Obviously, in computing the total income, and there are 4 or 5 case laws only in respect of this, in computing the total income. So if I can just also give a sequence of it, it will be better for all of you. I'll just take the indexed. Sequence number 3 to sequence number 7. 3 to 7. Sequence 3 to 7. So in computing the total income, this is the importance of the classification. The second, obviously every particular heads of income, first of all you need to classify the amount into the relevant heads of income, and each head has got its own rule of classification. The first section, which is the charging section of every head, the first section, which is the charging section of every head, lays down the test. It lays down the test of classification. So therefore, the very first thing that needs to be considered is appropriate classification of the income into the relevant heads. So sequence number 3 to 7 primarily is in respect of that. Second one, which is about the importance of classification. The TDS is also very critical aspect. Why TDS is important? Because if you see all the section of TDS starting from 192, the payment that you have made should be in the nature of salary. 193 payment should be in the nature of interest. 194H should be in the nature of commission. 194J, fees for technical service, it should be in the nature of a technical service. 194I should be in the nature of rent. So the characterization of the amount as salary, as rent, as fees for technical service, etc. are critical. Unless and until the amount which has been paid by the payer can be considered as a salary or royalty or FTS or rent, the question of TDS being deducted will not arise. So therefore, the classification becomes critical in this particular case. And that is the reason why, students, in this context, the situation of TDS, the case laws, which is of classification, and that too for TDS purpose, it is the case law number 9 to case law number 13, 9 to 13, 9 to 13. In international taxation, students, if you see herein, there is section 9 which speaks about income which is deemed to accrue or arise in India. Income which is deemed to have accrued or arise in India. So therefore, that particular section 9 talks about the deeming fiction. Like for example, section 912 speaks about when the salary income of a non-resident will be deemed to have accrued or arise in India. 915, when the interest income of the non-resident will be deemed to have accrued or arise in India. 916 is in respect of royalty. 917 is in respect of fees for technical service. When these income will be deemed to have accrued or arise in India. So therefore, it is important that the amount which has been paid to the non-resident should be in the nature of salary if the target is 912, should be in the nature of interest if the target is 915, should be in the nature of royalty if the target is 916, or 917 should be in the nature of FTS. So therefore, in the context of the income deemed to accrue rise in India, deemed to accrue or arise in India, even for this purpose it is important, and for that the case law number 14 is what should be looked upon. This is section 9. In section 9, primarily this is what would be relevant. The last point, students, point number 4 is about what? The miscellaneous part, because this is not from the income tax law, this actually comes from the Land Acquisition Act, which is case law number 8. Case law number 8. So I have given you the list of the case laws which targets the classification part. Let's look upon to them one by one. Quickly, Chennai Properties and Investment Limited, students, the entire tussle or the entire fight was between the two heads, PGBP and house property. Now the question was, here the company, that is Chennai Property and Investment Limited, here the company was engaged in the business of developing and letting out of the house property. So to develop and let out of the house property, this was what the company was engaged into. Now here the company which was developing and letting out of the house property was there. In this context, students, the question that came up was, the rental income that was being earned, will that be charged under the head house property or under the head PGBP? I think this is the very popular case law, and more or less all of you are aware of this judgment. The only factor from the examination point of view, what you need to remember is what I need to just put to all of you herein. See, here we have made an observation of a provision. The provision is section 22. What it says, that the rental income from house property is taxable under the head house property only if the house property is not used by the SSE for its business and profession. So if the SSE happens to use this house property for the purpose of its business and profession, then the rental income arising from such house property will not be charged under the head house property. This is the provision which has been there. In the analysis part, what it says, object of the company needs to be looked upon. There are two things finally to conclude, students. Here they went with the memorandum of association, the object clause. They went with that, and in the object clause the main object is what has been written, and the main object itself was very clear to suggest that the business of the company was to develop and let out the house property. The business of the company was to develop and let out the house property. The fact that this happens to be the object of the company, accordingly the rental income arising therefrom, they have said that it is a business income. Secondly, the fact that the company is developing and letting out of the house property, can we therefore say that the company is using that house property for the purpose of its own business and profession? Can we say that? In this case, the company is developing the house property for the purpose of let out. Therefore, can we say that the company is using that house property for the purpose of business and profession? And the answer is yes. So therefore, students, in this regard, this is also primarily an important aspect which the court has looked upon. So if you see herein carefully, that what they have suggested, the object of the company needs to be looked. The deciding factor as to the head under which the income was to be assessed is not the ownership of land or lease, but the nature of the activity of the SSE and the nature of the operations in relation to them. This is a general observation. The object of the company, this is important. Here you need to be careful. the object of the company must be looked upon, must also be kept in view to interpret the activities. The main object as per its MOA is to acquire and hold properties and earning income therefrom. So finally see the conclusion, students, herein. So accordingly here also analysis is the game. Section 22, in fact even section 22 you should know, you should not miss upon on this part of section 22, that the rental income will not be charged under the head house property if the assessee is using the house property, if the assessee is using the house property for the purpose of its business and profession. So just keep that observation in mind. Conclusion, rental income from properties of company shall be taxable under the head PGBP if the main object of the company is to let out the property. If the main object of the company is to let out the property. The charge under section 22 is not applicable as it is established that the house property is used by the assessee for the purpose of its business and profession. So just keep this aspect in mind, and this is how you go about it. This is your conclusion, students. Fine. Now is the next one. In fact, the next one is something you can just read it once. Students, start reading this particular judgment. This is a simple one. Herein it was a case wherein the assessee, Raila Corporation, what the assessee has to primarily do, same particular judgment of Chennai properties. In fact, you will not come to know whether it is Chennai or Raila. Always use the Chennai Properties and Investment Limited as the base, because even in this judgment they have used the Chennai Properties and Investment Limited as the base of the judgment. You will read it, this particular judgment, at your end. Come to this one, this is also equally important. Raj Dadarkar and Associates versus ACIT. One more point which I just wanted to clarify to all of you. Please don't get disturbed that students also keep on asking this question, that shall we remember the case law like CIT versus assessee or assessee versus CIT? Not required. If you just happen to know the name of that particular case law, that itself is sufficient for you to go through it. Name of the case law itself will be sufficient enough. So don't get into all that cosmetics of CIT versus this, although when you do your legal journey it will have its implication, but not at least for the purpose of your examination. Now here was two issues was there in this judgment, students. Here it was a case of a partnership firm. First of all, the challenge was, here the assessee has obtained the property on lease. They have obtained the house property on a lease. It was a long lease, by the way, on which the assessee has obtained the house property, and that house property they have given on rent. Now accordingly the challenge was whether the rental income will be charged under the head house property or under the head IFOS. The rental income will it be charged under the head house property or under the head IFOS. There are situations wherein the assessees sought to take it under the head IFOS instead of the head IFHP. The reason was, assessee was of the argument that for the purpose of the head house property, we should be the owner of that particular house property, which is the first condition. You need to be the owner of that particular house property, being the first condition for the purpose of chargeability of the amount. And then thereafter the second particular condition was that once that particular house property, you own that house property, then if you are not doing any business through that particular house property, then and only then the rental received will be charged under the head house property. You need not be doing any business in that property, then and only then you will be charged under that particular house property. So ownership and not engaged in any form of business in that particular house property. This was primarily the two particular contention, ownership and not doing the business in that house property. Here primarily, students, if you remember, you are maybe aware of section 27, which speaks about deemed ownership, and deemed ownership they have covered even the long lease cases wherein the lessee would be considered as a deemed owner if it is that of a long lease case. That is first one. So the ownership contention or the argument was settled because the section under house property head itself provides for the situation when a particular lessee can be considered to be the owner of that particular house property. So it is already being settled in the section itself. The second part, which was about whether the SSC is engaged in the business of letting out the house property, this particular part, the court in this particular case sought to look into the partnership deed because it's a partnership firm. So it went on to look into the partnership deed. In the case of the company, you have seen in Chennai Properties and Investment Limited, the court has gone through what? The court has gone through with the memorandum of association. Here the court has gone through with the partnership deed. And by going through the partnership deed, it found that the language of the partnership deed is inconclusive, is quite vague, very arbitrary. It cannot suggest in any way that the SSC is engaged in the business of letting out of the house property. We will see the kind of a language that has been used in that particular partnership deed, which was very clear that it leaves scope of different interpretation. It leaves the scope for different interpretation. What the court did thereafter was that, having concluded that the partnership deed is not conclusive to determine whether the SSC is in the business of letting out of the house property, what the court did thereafter, the court in this case thereafter went on to look into the actual income position of the company, to determine whether the renting part or the letting out part, the income from the letting out of the house property, whether that income forms a substantial portion of, the income of the house property or not. So if it forms the substantial portion of your total income, then it could be safely be concluded that the main activity of the company, not the company, the main activity of the partnership firm is to let out the house property. But here also, going by the actual income position, the court said that the actual income does not suggest that your substantial earning is from letting out of the house property, which therefore implies that the argument of charging this particular income under the head PGBP or IFOS is not sustainable, is not valid, and this rental income will be charged under the head house property because it satisfies both the condition. And which are those two conditions? One, the ownership condition, and second, that the SSC is not doing any business through that particular house property. So here, students, what we have dealt was in respect of the ownership provision. So 27(3)(b), this particular clause, that the long lease which I was just talking about it in this regard. So if you see in this context, a 12 years period, 12 years lease, in this case the lessee will become what? Deemed owner. The lessee will become the deemed owner. This is how it has to be looked upon. The analysis, if you look upon to this, when rental income is chargeable under the head IFHP or PGBP. So accordingly, the same thing which we have looked upon, a 12 years criteria made him as a deemed owner primarily. Object clause of the partnership deed not conclusive factor, and finally, as I am going to the header, distinguishes the reliance or the coordinate. This Supreme Court in Raj Dadarkar's and associate case, they have sought to distinguish this fact with the fact of Chennai Properties and Investment Limited. what they have said, this underlined part, if you see herein, in the instant case, assessee could not substantiate that its entire or substantial income was from letting out of the house property. So, in the case of Chennai property, the memorandum of association itself was conclusive. Here the partnership deed is not conclusive. How it was not conclusive? See the language, students. If you see the partnership deed, the language of the partnership deed, what it has to say? The partnership shall take the premises on rent to sublet or do any other business. So either they can do a subletting part or they may do what? Any other business, as may be mutually agreed by the parties from time to time. So where they say in the deed that their main object is to let out the house property, that is not conclusive from this language. It is left open to the partners to decide whether you want to do a subletting or you want to conduct any other business. It's up to the partners to decide. And if it is up to the partner to decide, accordingly, it was being held what? That the deed is inconclusive, and hence the final judgment which was being made by the Supreme Court was that the income, which is the rental income, will be charged under the head house property. So this is precisely how they have went in to give their final conclusion. So some comment, students, has been written, but as I told you, here also the point is provision needs to be known, number one, as well as the reasoning. Raj Dadarkar is equally important. How do you distinguish that the question is on Raj Dadarkar's case or the case of Chennai Properties and Investment Limited? How you will distinguish between the two? Based on if it is a company, it is Chennai. If it is a partnership firm, with this kind of deemed owner position, with this kind of partnership deed which is inconclusive, which is quite vague, that is where you will distinguish between the two. So here, students, you have to not only go through the provision, you also have to ensure that the analysis go only with that headers. You only have to go with the headers. It's like your old course students ISCA. The one of the very popular way of learning ISCA, as told to the students, is to remember the headers. So that is what I have also made the huge analysis that has been given by the court made into headers, so that it becomes easier for you to remember and digest that particular all the points raised by the Supreme Court. Now students, Tamil Nadu Tourism Development Corporation, students, it's an easier one. Herein there was a, this is I think very easy. Here it was a terms of the contract. Primarily the SSC, which is the Tamil Nadu Tourism Development Corporation, they had resorts all across the state. Some of the resorts were loss making. Accordingly, it invited the franchisees, the local players, who can carry the resort business in that particular property. However, the terms of the agreement required that the franchisees will be conducting that hospitality business in the name of the SSC, which is Tamil Nadu Tourism Development Corporation. Plus, there were terms in the agreement which required that the franchisee had to have minimum standard of quality, performance, because the SSC name was involved in that business. So the minimum standard of the quality and performance was also being put forth in that particular agreement. Now, the agreement required the franchisee to give to the SSC a fixed monthly amount. So it was not variable, it was a fixed monthly amount. Question therefore came up was whether that fixed monthly amount will it be charged under the head house property or under the head PGBP, and the court has held under the head PGBP, because the SSC through the franchisee, the SSC, that is Tamil Nadu Tourism Development Corporation Limited, through its franchisee is said to be doing the business in those particular property. is said to be doing the business in those particular property, and that exactly was the point. So this is how they have given the judgment. Again, an important one, students. So they have not targeted this particular case law, and that is the reason why I am laying this to be an important one. How do you identify? They will say it's a local authority letting a hotel business. So local authority, they will give the wording local authority, okay, and that is how you are going to identify. Asian Limited, students, just you can go through them. Now this is a typical case law which I have made it as a last, but let me do this. The entire catch point, students, here was on the compensation that the assessee has received. It was in respect of the compensation that the assessee has received. So everything boiled down to the compensation part. Now the assessee, it was a compulsory acquisition of the land which belonged to the assessee, and in that assessee got an enhanced compensation. But the enhanced compensation which was being received by the assessee was quite late, and hence there was an interest component which got arised. Now students, why this is a very typical case law? Because here our understanding is less of income tax law, you require an understanding more of Land Acquisition Act. The understanding is less of the income tax law, more understanding is that of the Land Acquisition Act. Why I say so? See, just to make the things clear while you do the analysis part, so that it becomes easier for all of you to comprehend this case law. Mawaliya Bhikubai. Mawaliya Bhikubai, this is a judgment. Now in this particular regard, Balabai, full Balabai, in this particular judgment, see, the challenge is interest under 2 section. Interest, you will also take a note of it, interest under section 28 of the Land Acquisition Act. Land Acquisition Act. If you go with this section 28 of the Land Acquisition Act, then it becomes a case of referred as what? Accretion to the compensation. What do you mean by accretion? What do you mean by the term accretion? Accretion means addition to the compensation. So it takes a form of addition to the compensation. So that is what it takes the form as. And form part of the compensation. And form part of the compensation. Whereas in this context, interest under section, there is one more section which is there, which is I think 34 of the same Land Acquisition Act. I am just writing the abbreviation form. As per this is for delay in making payment. Delay in making payment after the compensation is determined. After the compensation is determined. So there are 2 sections for it, 28 and 34. 28 and 34. So in this particular case study, it was section 28, wherein the assessee has received the interest. The name that they are using is interest. But if it is the interest which has been given under 28, then the language of 28 says that this interest is in the nature of accretion to the compensation which was originally decided. And as I told you, accretion will mean addition to the compensation. So this is what? Not in the nature of an interest. This is in the nature of compensation itself. Whereas if it was 34 interest, then indeed this interest is towards a delay in the payment after the compensation is determined. So therefore on these 2 factual grounds, students, Mawaliya Bhikubai Balabhai versus ITO. This particular judgment is the key one in this regard. I think this was the crux of the entire story. You just need to remember the two. Herein, obviously, because it was a issue in respect of income tax law, the question that arose is been given to you. What is that? That the point number 4, if you see the facts of the case, herein, the assessee herein has said that the assessee who is there primarily has made an application to the income tax officer suggesting that kindly allow me to get a nil TDS certificate. As you are aware, in TDS there are two sections, students, 197, 197A. So for short deduction of TDS or for no deduction of TDS, the payee, that is the receiver of the amount, has to make an application to the assessing officer. Based on that application, the assessing officer, what he is going to do? He is going to thereafter look into that particular application, and wherever he finds justified to the claims put forth by the payee that no TDS should be deducted, or the TDS should be deducted at the lower rate or at no rate, whatever it be, the certificate to that effect will be given to the assessee. So here the AO said that, look, this interest that you are going to receive would be chargeable to tax under the Act, and therefore the payer of the amount will be required to deduct the TDS. The entire and the interest TDS section, I think all of you may be aware, 194A. So therefore the payer will deduct whenever he will make the payment of the interest under section 28 of the Land Acquisition Act, he will deduct TDS because it's in the nature of interest. So the application of the assessee was rejected, the matter went into the court, and accordingly the court held what? That in this category, the interest which has been paid by the authorities was towards the accretion of the compensation, because it is under section 28 and not under section 34. Therefore, this will be like a capital gains, not in the nature of interest, and therefore the payer of the amount will not be required to deduct the TDS, because for capital gains, students, there is no TDS section so far as the resident pay is concerned. For capital gains, there is no TDS section so far as the resident pay is concerned. Only one particular case is there, property 50 lakhs above, 194IA. So that is one section, but any case, the 194IA is not relevant in this regard. Now comes to the next bulletin of 194IA and all, the TDS sections. So herein we have seen that classification issue. Majorly the tussle was between the two head, House Property and PGBP, in that judgment of Chennai Properties Limited, Raila Corporation, Raj Dadarkar and Associates, Tamil Nadu Tourism Development Corporation, and one case law which I have given it to you, Asian Hotels. So they were majorly towards the two heads. We have seen this particular judgment also, the miscellaneous part. Now on the TDS front, let's have a look. The first one is the Manipal Health, a Supreme Court judgment. The game was whether the amount which has been paid to the doctors, will it be considered as a salary income so as to deduct the TDS under 192, or it will be referred as a fees for professional service so as to deduct the TDS under section 194J. So this was primarily the issue under consideration in this case. Please have a look to this particular part. All of you will read the facts of the case quickly. So if you would have seen here, the provision as such is not that significant. Just quote 192, that when the particular amount will be charged under the under section 192 and when it will be under section 194J. So that's the two aspects that you are supposed to refer in this particular judgment. Now analysis one that is there, contract for service or contract of service. So if it is for service, then it becomes what? If it is for service, so it is a professional fees, and if it is contract of service, then it will be a salary. So what the High Court said, the terms of the contract. So here students also the analysis is important, because the court has picked up the facts, the terms of the contract to finally conclude its judgment. So they have picked up the facts to finally conclude its judgment. So accordingly, if you see herein, what they have to say, that the terms of the contract has to be seen to decide whether the employer-employee relationship exists or not. Non-competition clause, if you would have seen the facts of the case, there was a non-competition clause which was being given, as per which the doctors were not supposed to join anywhere, nor they are supposed to do their private practice. So there was non-competition clause which this Manipal Health Hospital has made with all its top-notch doctors, the high-end doctors. This is what they have done the agreement. So what they have to say finally was that mere provision of such clause, that there is a non-compete clause which is entered between the hospital and the doctors, does not by itself imply that the doctors are acting as an employee. On the contrary, students, if you know what happens when the employee primarily he leaves the company, at that time the company enters with him a non-competition clause, that look, you are not supposed to join our rival firm. This is what they pay to the employee once he leaves the company. Here was a case which is completely different. Now you tell me, if supposingly there is an employee who has been taken, is there any such non-competition clause which has been put forth with the employee of the company? And the answer is no. As I told you just now, that these non-competition clause are put forth at the termination or the expiry of their contract, not at the very outset. So just be very careful about this particular observation, and therefore what they have to say, mere provision of such clause in the agreement shall not change the nature of the contract, shall not change the nature of the contract. Point number 3 is condition of bar to private practice. Again, they are just picking up the terms of the contract, and that's the reason why I told you that the headers are important here, because they are simply picking the terms and suggesting that these are irrelevant to decide that there is an employer and employee relationship. So condition of bar to private practice, what they have to say, imposing of such condition is to make use of expertise, skill of doctors exclusively for the SSC company. So primarily this non-competition clause, which also have said that you will not be you are not supposed to do your private practice, was also necessary to ensure there is a complete bar or a complete restriction on these doctors to do their private practice. So therefore, but that by itself, does it imply that they are the employee? No. You pay us well, our professional fees, why we then be doing these particular private practice at first place? So accordingly, in this regard, they have said that the High Court held that the consultancy charge is paid to the doctors rendering professional service would be subject to tax deduction under section 194J and not under 192. So therefore, this was a conclusion that they have put forth. Avenue Chit, Super Chit Private Limited, again a TDS section, 194A. Students, what happens in the Chit case, you may be aware. Everyone will contribute the Chit amount. say 1000 rupees, they are 30%, so every month they are contributing 1000 rupees. 30,000 is what is the fund which has been collected. Now, the bidding will take place, and the one who wins the bid is the lowest bid. So here actually the game is the lowest bid, meaning thereby who is giving the highest discount, he gets the chit amount. Chit amount means the bid amount. So supposingly there are all the 30 people who have participated in this particular chit. The lowest bid came for 2,500 rupees. So the highest discount, that is 27,500. So the one who has gone with the highest discount, or conversely put, the one who has made the lowest bid is the one to whom the chit will be given to. Now what happens to that difference 27,500? You have given to this person 2,500. What happens to this 27,500? This 27,500 gets distributed amongst all the members on a pro rata basis. This 27,500 gets distributed amongst all the members on a pro rata basis. So therefore, the issue under consideration is this, that whether this particular chit amount which is there, whether this particular chit amount which has been paid on a pro rata basis, does it qualify as an interest on which TDS under section 194A shall be deducted, whether it will qualify as an interest. So the characterization of the amount is important. Unless and until it can be considered as an interest, the question of deducting the TDS will not arise. So here students, the entire game is this definition of 228A, which I can just make you write in a simplified form. So here students, if you see 228A, the definition of interest. As per this particular definition of interest, primarily it means what? It means either of the two things, and these two things are: the interest should be payable. The interest which is payable is either in respect of money which is borrowed by the SSE, or it should be in the nature of the debt which is incurred, as the case may be. Money borrowed or debt incurred. On that the interest becomes payable. Then in this case we can say that what is paid is in the nature of interest. So this chit dividend which has been given on a pro rata basis, can we say that it is on account of any money which is borrowed by the company or any debt which is incurred by the company? And the answer is no. There is neither any borrowal nor any debt which has been incurred, and hence it cannot be said to be in the nature of interest. The amount which is paid on a pro rata basis cannot be said to be in the nature of interest. This is what they have said in this very important judgment. Did you all got this one, students? Now with this one, the next particular judgment as well, if you have a look, Kotak Securities, this is about fees for technical service. Students, when we talk about, this was a case wherein the company which is there was paying for to the stock exchange, the company Kotak Securities Limited, herein they were making the payment to the stock exchange for the fully automated online trading facility. So the company was a broker. It was making a payment to the stock exchange, which is Bombay Stock Exchange, for fully automated online trading facilities. And therefore the question came up was whether it is in the nature of, whether the payment is in the nature of a technical service. Because if you say that it is in the nature of a technical service, then in that case what? It will be considered as a technical service, fees for technical service, and hence the payer will be then required to deduct TDS under section 194J. So what are the thresholds of a technical service? So students, technical service, this also would be important while we discuss the last case law on this segment, on that the technical service under 9(7). See, there are two sections, 917 income deemed to accrue or rise in India, which speaks about the fees for technical service received by the non-resident, and the second one is 194J, wherein the payer is required to deduct the TDS towards the payment of fees for technical service. In both the cases, the concept of technical service is the same. So therefore, students, technical service, as the name suggests, technical service so technical service are in the nature of specialized service. So always keep in mind, specialized service where there is a human participation, meaning thereby there has to be some sort of human involvement to provide that service. So unless and until there is a human involvement to provide that service is established, the service cannot be considered to be a technical service. So these are the two standard statements that you can always make in your answer while you do your analysis. Payment to Bombay Stock Exchange by its members are not in the nature of technical service, are not in the nature of technical service, but one in the nature of payment made for standardized facilities provided by like the way you are giving this service to any other third party, I am also a recipient of the same. There is no such specialized service that has been given to me. There is a facility which is available. Those who want to avail that facility, so already there was a facility which was there in existence. Those who want to avail that facility, they need to make the payment of this particular amount, and accordingly the SSC made the payment of the amount to avail the standard facility which was already in existence. Hence the services was not a specialized services, and accordingly it cannot be considered to be a technical service. So this is what the observation, students, of the Kotak Securities Limited is all about. Now the next particular case law, Ajmer Vidyut Nigam. So if you go with the next particular judgment, so this was for Kotak Securities Limited. The next particular judgment, students, if you go with that, this is all on the same similar line. Ajmer Vidyut Vitran Nigam Limited. Students, here there are some specialized charges. My submission to all of you would be this: just read this case law, because you will not come to know, because they are very highly technical in nature, that on these specialized charges of the power generating company for which the payment, will it be considered as a technical service or not. So one particular charges they have said it yes, another particular charges they have said it no. What is the reason? The same thing, that one was specialized in nature, another was something like standardized facility. So but the very fact that they are quite highly technical terms which are being used specific to this industry, my submissions to all of you would be, kindly go through this particular judgment. As I told you, in one case it will be yes, in another case it will be no. How yes and how no? Based on the same reason which I have just now put forth for the Kotak Securities Limited case law. So students, herein, if you go with that, so the facts, you will read it once and just see here, you will get, this is not in the nature of the technical service, SDLC, but the above one was in the nature of a technical service, transmission and wheeling charges. This constitute technical service. So that is one thing which, just go through it once. Chances of this is less, but if it comes, at least you should know. Director Prasar Bharati, very recent entrant to the entire judgments. Director Prasar Bharati, in the February month itself. See, the misconception amongst the students is that those case law which has just now have entered, they are the one which is going to be targeted in the examination, and you may be surprised that the ICAI may take up those case law for which are due but not been asked so far. So please don't bet on anything. You will be thoroughly be disappointed in the examination. Just go with neutrality. Here is a case of students 194H, commission and brokerage. As you all know, if the amount which is paid is in the nature of a commission, then in that particular case, the payer of the amount, which is the principal, will be required to deduct the TDS under section 194H at the rate of 10%. This is the issue which is there. This is a law of 194H. This is the law of 194H. Now, sorry, the TDS rate is 5%, not 10%. 10% is for interest. So on that note, students, the facts of the case. See here, before we can proceed on this one, there was other CBDT circular also in past which was being given, which was based on some case law of Jagran Prakashan Limited. I don't know how many of you are aware of that CBDT circular. Nevertheless, students, in this industry, like for example the newspaper advertisement, if we talk about that, newspaper advertisement, what happens in that? As far as the newspaper advertisement industries are concerned, if I have to give an ad to this in a newspaper, so what I do, I go to an agency, the agency will give me the rates for each and every newspapers like Times of India, Hindu, Hindustan Times, whatever be the newspapers, he will give me the rate, and also he will give me the rates for how much would be the advertisement charges if you want to do ad in the first page, third page, all that. And on that I have to take a call as to which is that newspaper wherein I have to go for advertisement. He will also give you the rates of the ad. Everything he is going to specify to you, and on that, as I told you, you need to take a call as to what is that particular amount, what is that particular the newspaper on which you need to give your ad. So in this context, students, what happened was, in this Director Prasar Bharati's case, what happened was, the company which was there, primarily the SSC, okay, if supposedly, if you want me to do a further analysis of that particular newspaper thing, I'll just do that first and then come back to this one. So to have a better clarity, because we don't know, in the examination we may think it may be Director Prasar Bharati and they will target you that newspaper case study. So it can be anything, so just be careful. So in that particular newspaper, so if supposedly you decide the advertisement in say 4 newspaper, the rates are already being told to you, you make the payment accordingly to that particular agency. What the agency will do, his commission, how much he is going to get a cut on this rate, it is already being determined by the newspaper company and the agency. So he retains his cut, and the balance amount he give it to whom? To the company. This is the modus operandi. Fine. Question therefore is, the amount which he retains for himself, can that be considered to be a commission? Because if you say it's a commission, then the TDS angle will come into picture. So can that amount which has been retained be considered as a commission? And it was being held that it cannot be considered as a commission for the reason being. Why it cannot be considered to be a commission? It cannot be considered to be a commission because there is an absence of a principal and agent relationship. There is an absence of a principal and agent relationship in this particular case. Because there is an absence of a principal and agent relationship, because the agency has not acted as an agent of any newspaper company. I was not pushing for any newspaper while the customer approached that agency. The agency was not pushing for any of the newspaper. It has already the rate with itself. It just ended up disclosing the rates to that particular customers who approached him. And on that particular basis, what happened was that the rates was being disclosed, and on that particular thing, the customer was led to decide as to in which newspaper they want to do their advertisement. So there was no canvassing of any newspaper made by the agency. It implies therefore that he was not acting like an agent of that particular newspaper. In the case of students, the television channels which we have, Sony Television, Star, all these channels that we do have, here also if the Pepsi as a company wants to do the advertisement in these channels, what is the modus operandi again on that? If Pepsi as a if the Pepsi as a company wants to do an advertisement, they will again approach the agency, and the agency will give you the rates the way a newspaper agency gives you the rates. Again I am repeating, here the agency does not tell you that look, you have to do the advertisement only in Sony. It is up to the company to decide where they want to do the advertisement, which is that slot that they want to take for advertisement. Let the company decide. Their job is to just to give them the rates, that's all of it. Therefore, if the Pepsi finally freezes the advertisement slots in various channels for which the rates are already being told to Pepsi, Pepsi will thereafter make the payment to the agency. Agency will retain its cut and then thereafter will remit the balance to the television company. Therefore the question is whether that commission can that be considered for the purpose of 194 HTDS. Again the answer is no. Why is it so? Same logic the way we have said for the newspaper agency, same thing happens even for the television companies. The agencies of the television companies which is looking out for the advertisements, because they were not acting as an agent for a particular television company. They were not acting like an agent for a particular television company. And because they were not acting like an agent for a particular television company, therefore what? Therefore, the question of that amount being considered as a commission does not arise. On this backdrop now, we deal with this director Prasad Bharati. This is a case of a Doordarshan. Now what happens is that in Doordarshan, the agency which has been appointed to look out for the advertisement in Doordarshan, these agencies are referred as accredited agencies. They are accredited agencies. Now somebody will argue, what is this accredited agency? So accredited agency, students, means the agency which has been appointed specifically for Doordarshan. And then students, these agencies are also been given the targets. They are given the targets. Look, you do this much target, you will be getting this much of the commission. So they have their own grading system and all. So therefore, higher the business, higher will be the commission. So this is how they have their, through their accredited agency, Doordarshan gets the advertisement. In the terms of the contract, between Doordarshan and the agency, they have made the reference of the cut as a commission which the agency will retain for each advertisement that it will obtain for obtained for Doordarshan. So they have referred that amount as a commission. They have referred that amount as a commission itself. And therefore, students, comes the real question that whether this particular amount which has been retained by the agency or paid to the agency as the case may be, can that be considered as a commission? Because if you say it's a commission, then in that case be ready for the TDS under section 194H. What's your take on that? Will that be considered as a case of a commission under 194H? Have a look to this one. Director Prasar Bharati, quickly. So students, herein, as it has been said to you in this context, the terms itself was telling you that it is in the nature of a commission. You are an accredited association, agency of the Doordarshan, meaning that by appointed person that you will be the one who will be doing the advertisement for the Doordarshan. Secondly, if you see the kind of the contract, more the business, more the commission. This is incentivizing so that you start canvassing for DD ad from that particular companies. So therefore, everyone will be pitching it aggressively that I should be getting more of the DD ad so that I will be getting more of the commission. So that the terms of the agreement is different from that two case studies that we have told. Which was that? One was the Jagran Prakashan, which is of newspaper, and second one was the private channels, not of DD. So in respect of that, they were principal to principal. The cut in those cases was not in the nature of a commission, so therefore in those cases the question of TDS under 194H will not arise. However, in this case 194H TDS will arise. So I have given that particular Jagran Prakashan situations also towards the note so that it can be compared in this regard. With that, student, this is a last case law on that particular entire classification. Supreme Court judgment, international taxation, 917, fees for technical service. Students, before that, in the section 9, there is two clause. When I talk about section 9, there is section 911. 911 has got, students, many things, that in these cases the NR income will be deemed to have accrued or rise in India. NR income will be deemed to have accrued or rise in India. So they give you a list of things. One of the things happens to be business connection. So if there is a business connection of the non-resident in India, then the income of the non-resident, which income? If there is a business connection, then it will give rise to which income? Business income. So that business income will be deemed to accrue or rise in India for that non-resident. 917 is about fees for technical service. So question that came up was whether it is a business income arising from that business connection or FTS. So here primarily the department was putting their weight behind on FTS, whereas SSC was saying that no, there is a business connection in India, so therefore it should be characterized as a business income. Whereas the department was putting their weight behind on FTS. They were of the view that this income is in the nature of fees for technical service. So therefore the larger question that came up was this, students. Now be careful and try to understand this particular judgment very thoroughly. So the larger question that came up was this, that if it is a business connection, some students actually have argued during the class, what's the use then? SSC says that it is in the nature of business connection, department is saying it is in the nature of FTS. In both the cases, the income anyways would be taxable in India as per the Income Tax Act. And your answers are right, students, in both the cases, because the SSC was saying, look, it should be like a business connection in India. Department was saying, no, it should be like an FTS in India. So both the particular parties primarily were only having the difference in terms of the characterization of the amount. If somebody has to think that business connection, FTS, whether it will be taxable under the Act, yes, it is taxable under the Act. So somebody will always think that then what's the use of it? Some students will always be of the opinion. That was a question that was being asked to me in the class. And what's the use of that? If in any case it is taxable under the Act, so what is this business connection versus FTS all about? Here, students, this non-resident is also a resident in his own country. This non-resident also happens to be a resident in his own country. Do you agree to that or not? Yes. So if he is a resident of that particular, if he is a resident in his country, then as per the resident rule of taxation, the world income is taxed. As per the resident rule of taxation, the world income is taxed. And if the world income is taxed, then I think all of you are aware of this point. Then this income which he is earning in India, will that be taxed in his own country? And the answer is yes. Then it comes down to double taxation in both the countries, India because the source is in India, and his home country because it's a resident country. And the moment it becomes a case of a double taxation, then what is that what we are supposed to refer is DTAA. What is that we are supposed to refer is DTAA. And then while we refer DTAA, in that, students, while we refer double taxation avoidance agreement, in that what happens? The treaty will then decide that this income will be taxed finally in which country. And as per the treaty, be careful, as per the treaty, it says that if it is if the income is in the nature of business income, if the income is in the nature of business income, then the resident country will be in a position to tax it. If the income is in the nature of business income, then the resident country will be in the nature to tax it. Resident country, meaning thereby it's a home country. Whereas, as per the treaty, it says that if it is in the nature of an FTS, then even the source country, which is India, can impose a tax. Even the source country, which is India, can impose a tax. So this was a real game. And that was the reason why both of them were fighting in India. That the SSC was saying it should be a business connection, department was saying no, it should be an FTS. Because they knew the final position in the DTAA will favor the home country if the income is considered as a business income, whereas the final outcome will favor the source country, that is India, if the income will be considered or classified as FTS. So what was the facts of the case? Because what I was telling you was a background. But what was the facts of the case? The facts of the case, students, here was the SSC, it's a multinational giant engaged in a shipping business. Now, accordingly, being engaged in the shipping business, it has got agents across the globe. So some of the agents were also in India. The role of the agents was, what was the role of the agents here? The role of the agents was to ensure that whenever the orders are being received, they will directly put their order in an ERP system which shall be provided by the multinational company to all its agents. So supposingly, if I have to become an agent of that non-resident company, the shipping company, then I have to ensure that the ERP system is also installed in my location. And who will install that particular ERP system? It is a non-resident, that foreign company. Now that non-resident company has its own software service provider who comes to the agent location to set up that ERP system. And accordingly, there is a huge amount of cost which is involved. And therefore, the foreign company takes reimbursement. The foreign company takes reimbursement of that cost which is being charged to them by the software solution providers. So the foreign company, which is this multinational company, took the reimbursement of what? Of this particular the ERP system which was being set up in the Indian agent's premises. So the agent had paid that amount. The question therefore came up was, the amount which was being paid by the agent to this foreign company was in the nature of, be careful, was in the nature of business income, or it is in the nature of fees for technical service. What it would be considered as a business income or an FTS. So here the Supreme Court said was, I have given the pointers for this one here as well. If you see, you will get the pointer, students. So whether the amount is in the nature of an FTS or it is in the nature of a business income. Now this was what? A centralized communication system which was an integral part of their business. So accordingly, a standardized facility, the way we have dealt in Kotak Securities Limited. So this is again a standardized facility, a software whose ERP which is maintained, like for example, the ERP which is been used by an Indian agent, will that be the same ERP which will be used by a US agent of this foreign company? And the answer is yes. Across the world, the setup is the same. The fact that you have to act like an agent of ours, you need to have the setup. Now who will give the setup? These software service providers of this foreign company, they are the one who do the setup of the ERP system in the agent's location. Whatever is the cost, they will bill it to the foreign company. The foreign company will take the reimbursement from the agent. So therefore, when the agent makes the payment of this particular amount, will that amount be considered to be a payment towards business income of the non-resident or fees for technical service? So therefore, since it is a standardized facility, accordingly, they have said that it is not in the nature of a technical service, because technical service, as we all know, is a specialized service, and this is not a specialized service, it is a standard facility which was being set up in the agent's location. Further, if you see, there are certain more points emerging from this decision, which I have already created the compartment. The reimbursement was at arm's length. The reimbursement of that particular amount was at arm's length, meaning thereby the transfer pricing provision, if somebody wants to invoke, they may not find any success, because whatever was their cost incurred by the foreign company, they were only taking the reimbursement in respect of that cost. So it is what is their business expenditure, what they have incurred, they are seeking a reimbursement of that business expenditure. So whatever is my business expenditure which I have incurred to provide this software, that reimbursement I am taking it from you. This is what is the reimbursement all about. So on that note, DTAA was applied, and as you all know, DTAA said that if the amount is in the nature of a business income, then it will be charged in the home country. Which home country? Where its POEM is established. So students, this is how it has been considered to arrive at the conclusion that the income is in the nature of a technical service, not in the nature of, to arrive at the conclusion that the income is in the nature of business income, not in the nature of technical service, they have made a reference of Kotak Securities Limited, the case law which we have just now have referred it. So please do make a reference as well. This is also equally very important case laws. So this was all the set of the judgments in respect of the case laws which are being there. Now comes the issues on the waiver part. Now students, what exactly this issues on the waiver is all about? Now there are series of cases wherein some waivers have been made, and accordingly the question is whether those waivers which has been made, will that be considered as an income or not, something of that sort. So there are case law, KLN Agrotech Private Limited on waiver. There is another judgment, Mahindra and Mahindra Limited, recently been targeted in that particular February judgment, again on waiver. There is one more judgment, students, McDowell's and Company Limited on waiver of some loan amount. So these are all the cases of the waiver. There is actually one more judgment, students, which is there in the ICI module, which is about SAIL Delhi. Even this judgment can find a place. I'll give you a brief note of this SAIL Delhi High Court. So therefore on waiver, 4 judgments, KLN Agrotech, Mahindra and Mahindra Limited. Thereafter you have this case of the McDowell's Company Limited, SAIL India. So these are the judgments which are being there. Let's look upon to this one by one. KLN Agrotech, students, a very unique case has happened herein. First of all, to understand this judgment, you have to understand one aspect needs to be known. The SSC has taken a loan from the bank, and on that loan, this SSC got a deduction also. So there was a case of a deduction of that loan amount which the SSC has received. Now somebody will argue, how come the loan is as allowed as deduction? Because here in the SSC was in the business of financing and all. So accordingly, that was the reason why this loan which was being obtained by the SSC from the bank was allowed to them as deduction. Just keep this aspect in mind. As such, this has got nothing to do with what we are going to analyze and conclude, but just keep this aspect in mind. So here, loan was being taken, and the SSC could not make any repayment of that loan. Along with the loan, there was interest also got accrued and outstanding. Interest also got accrued and outstanding, on which as well the SSC could not make any payment. So you can see this 635.26, this is both interest as well as the principal amount outstanding. So this is interest which is included in this total outstanding, which includes both principal as well as interest. Here what happened was they made a one-time settlement, OTS, one-time settlement with bank, and paid the lump sum amount of 378.72 lakhs without any bifurcation into principal and interest. Without any bifurcation into principal and interest. This is what they have done. So accordingly, this is what was a bifurcation which was being made without the bifurcation into a principal and interest. In the return filed, the assessee offered as income of rupees 256.52. What is this amount all about? The difference between the 635.26, which includes interest part, and the one-time amount that he has paid, 378.72. So in the return file, the assessee offered as income of rupees 256.54, being the difference of the amount outstanding. This amount which is outstanding is both principal as well as interest. Principal as well as interest. This amount which is outstanding is both principal as well as interest, and the actual amount paid, which is 378.72. So here he claimed, offered that 256 lakhs as the income. Correspondingly, it has also sought to claim deduction of interest of 193.96. It also sought to claim the deduction of 193.96. Now what the department did was, they disallowed this 193.96, but they allowed that charge of 256.54. They said that whatever income that you have offered, that is perfectly fine, but from where you are claiming the deduction of 193.96, how can you claim the deduction of 193.96? The fact that you have not yet paid that amount, how dare you claim the deduction of this amount of 193.96? So that was the reason of not giving them the deduction of this particular amount. Now students, these factors, I will just, supposing in a very simple way, the principal amount, if I may tell you, is say rupees 100. Interest accrued is say rupees 10, and which is outstanding. So the total is how much? 110. Now this total is what, to understand these figures, because these are all in decimal, so therefore it becomes a bit difficult to the students. 235.26 lakhs. 235.26 lakhs. So in this context, if you see, this is the total. Against that, there is a payment which has been made. Say the payment is made is of 80 full and final, OTS, and then the difference is how much? 30. So what the assessee did was, in his tax P&L, whatever is the income, the 30, the difference is what he has offered that as an income, and claim the interest as a deduction of 10. Claim the interest of deduction of 10. The department disallowed 10, suggesting what? They said that, look, you have not made the payment of 10, and since you have not made the payment of 10, the question of claiming a deduction of 10 will not arise. Claiming a deduction of 10 will not arise. This was the argument. The court in this KLN Agrotech Limited's case has held that, and this is important. They said that if you don't give the deduction of 10, then here assessee, so if somebody wants to cancel this, then here the assessee should show only 20 and not 30. Either of the two has to happen. If the assessee is showing 30, then he need to get the deduction of 10. If the deduction of 10 is disallowed, getting disallowed on the ground that you have not made the payment, so therefore where is the question of deduction being claimed, then in that case this difference of 30 will be reduced to 20. This difference of 30 will then has to be reduced to 20. This was the argument, and this is very logical. What was the reason? Which was the reason which was being given was in respect of 41.1. Now students, you may be aware of this section 41.1. As per this section 41.1, what 41.1 says? An expenditure loss or a trading liability for which deduction has been allowed to the SSC. This is the first condition. Expenditure, loss or trading liability for which the deduction has been allowed to the SSC. Which is the first condition. This is your first condition. Then in that particular case, there will be a deemed income. There will be a what? A deemed income that will arise under 41.1 if the amount has been either recovered, or if it is in the nature of a trading liability for which you have got the deduction earlier, then that trading liability is waived to the SSC. So the SSC should be receiving the benefit. SSC should be receiving the benefit in either of the two cases. First, either in the form of refund, recovery, or second, in the form of waiver of a trading liability. So in this context, if both the two conditions are satisfied, condition 1, SSC should be getting a deduction. Condition 2, the SSC should get the benefit, which could be either in the form of recovery or waiver. So if both the two conditions are satisfied, only then 41.1 charge would be applicable. So here, as far as the interest amount is concerned, SSC has not got a deduction, and if the SSC has not got the deduction, then it's waiver, because we can say this OTS is for what? Is for the principal amount. So therefore the interest is also being waived. So the waiver of the interest will not be considered as deemed income. Why it cannot be considered as deemed income? Because the first condition is not satisfied. And the first condition happens to be there has to be a deduction of interest. So students, this is what was the judgment all about. A very important judgment expected in the examination. So therefore be careful about it. So they have used the word, a very good phrase, double jeopardy. There cannot be a double jeopardy that in one hand you want to retain the interest income for taxation purpose, and on the other hand you also don't want to give a deduction. So this is a double jeopardy. So either you allow the deduction of the interest amount and tax that interest income, or else if you want to disallow this interest amount, then that income of which the SSC has offered, from that income also that interest portion has to be taken out, because the condition of 41.1 is not getting satisfied. So this is the judgment of this one. In the case of Mahindra and Mahindra Limited students, the SSC company has taken a loan for the purpose of buying the equipment. Loan for the purpose of buying the equipment. Now what happened was, there was a waiver of the loan amount. There was a waiver of the loan amount which was being advanced to the company. So therefore the question came up was this: whether the waiver of the loan amount, can that be considered as an income or not? This is expected judgment, students. So you cannot write only the name of the case law and the conclusion. You also have to write what? The content of that particular case law. So the content of this case law of Mahindra and Mahindra Limited. Supreme Court. So here they have gone with 2 or 3 reference. One was on 28.4. Are you aware of 28.4? In 28.4 what they have said was that if in the case of a non-monetary benefit or perquisite arising from business, then such non-monetary benefit or perquisite will be charged to tax. So here reference of 28.4 was being drawn by the Supreme Court, suggesting that can the waiver of a loan, can that be considered as a non-monetary benefit or a perquisite? To that the answer is no. A waiver of loan is a monetary benefit arising from business, and hence the charge under section 28(4) will not arise. So therefore 28(4) in this case, waiver of loan is a monetary benefit, and hence the charge under section 28(4) shall not arise. Next is 41(1). Now, as I was just discussing with you, 41(1) requires two conditions. Which are those two conditions? And the conditions are, first is the two conditions are mandatory. What is those mandatory condition? Number one, mandatory means necessary condition, or there is a technical phrase for necessary condition, and that technical phrase is sine qua non. This is the technical phrase. Sine qua non, are you aware what does it imply? It implies absolutely necessary. It implies absolutely necessary. And what is that? You all know. Here you can write sine qua non, absolutely necessary, that there should be a deduction of loss, expenditure, or trading liability. Now, whether the assessee got the deduction of this loan amount, this was a question that was being raised by the Supreme Court. Whether the assessee got deduction of this loan amount, to that the answer was no. Assessee did not got the deduction of this particular loan amount. So the fact that in this particular case, the loan amount which was being there, the deduction was being contemplated, that whether the deduction would be allowed to the assessee or not. The question was that on the loan, the assessee in this case has not got any deduction. Because in any case, students, loan is not your P&L debit item. KLN Agrotech, they got away with the deduction because the assessee was necessarily in the financing business, in that particular business. So they got away with deduction. But here the question of loan getting a deduction will not arise. This was the first one. The next one herein was the assessee had not claimed, just write the key points, has not claimed deduction of interest on loan taken in any year. In any year. It took deduction of only depreciation. Therefore, waiver of such loan would not be considered as waiver of trading liability. So it will not be considered as a waiver of a trading liability. So keep this observation in mind. Important case law, most expected case law, Mahindra and Mahindra Limited. You have to be careful as to what you write. You cannot keep writing around whatever you like. So it's important. Give the reasoning what the court has given the reasoning of. Now students, this McDowell's and Company Limited, this case law, although it's of Supreme Court, I always felt it is an important judgment, but ICAI hasn't yet taken this judgment in its case law segment. So obviously chances of this case law is very rare, but actually this is a very important judgment that was being reported by the Supreme Court when it got delivered. But as I told you, the chances of it now getting in your examination is very rare. Do ensure to read it once at least, so that this point that we have raised about the judgment of waiver is being tackled in this way. Now comes the next one, which is mutuality. Again an expected particular category, mutuality. Now students, mutuality, as you all are aware, nobody can earn income from itself. A mutual concern, an entity like a cooperative society, it gets the consideration from the members by various name for various purpose, but whatever be the purpose, it is actually for the common benefit of that entire society. So here in this two judgments, one is Sindh Cooperative Housing Society, which was talking about the transfer charge. So there was a charging of transfer fees, this was the amount, whereas this is more comprehensive, which actually talked about non-occupancy charges, transfer charges, common amenity fund charges. So whether these charges, will it be considered as falling within the scope of mutuality? Because if it falls within the scope of mutuality, then as I just now told you, that mutuality principle is what? Like, I am taking the money for you for your benefit, not from my benefit. So for your benefit, primarily here you means the members. You will mean the members. So an entity is taking the amount from you for your benefit. So if there is a surplus which is remained, it is of yours. Ultimately tomorrow I am going to apply this money again for your benefit. So the question of income arising in mutuality will never arise. So there is no income in mutuality, and hence it is not taxable. However, here the question that was there was about some specific charges being put forth in the name of non-occupancy charges. Now what is this non-occupancy charges? The non-occupancy charges is what, students? That you are not staying, but you have given it on rent to someone else. So here if somebody is earning from the property, what this society was doing was that somebody is earning from the property in the society. So therefore of that earning amount, give some money to us, to the society. So non-occupancy means you are not staying, but you have given on rent to someone, and because of that there is some money which you are earning from the property which is in the society, and hence give some money to the society also. Similarly, there is a transfer charges. Like, if I can just tell you, many seminars that we attend in ICAI, there is a contribution that we are supposed to give to CA benevolent fund. So that is what it is. So if you are paying, so pay for this also, like that they are collecting. So if you are receiving some rentals from your tenant, so kindly pay us as well, some few money you should be giving it to us also. The second charge is about the transfer charges. What happens is that the person, the member who's transferring that particular property, so he will also get the money on transfer of the property of the society. So that consideration received by the member, for that they will have to pay some amount to the society. So that is a transfer charge. Now see, here the money, in any case, the transfer charges, if you are taking from your member, so that is for the benefit of that particular property itself, which is of the society. So to the upkeep and the maintenance and all. The problem was that some of the cases, the transfer charges are being taken from the buyer also. Now be careful, students. Buyer is not a member as yet. Buyer is an outsider. So unless in the cooperative society registered, he is enrolled as a member, he is outsider, whereas the transfer charges has been recovered from him before he was being considered as a member of the society. Before he is considered as a member of the society. So therefore, again the question that arises is this, that whether this transfer charges which has been received, will that be considered as the income, transfer charges received from the buyer? Because here the department is arguing that the transfer charges received from the buyer, received from whom? From the buyer, is from a non-member, and because it is received from an outsider, hence mutuality will not arise. So this was the argument put forth before the court. Because you are taking it from a non-member, therefore the mutuality will not arise. And the common amenity, students, for the huge repairs and all, there is a common amenity fund which has been earmarked. So whether that common amenity fund which is earmarked, will that be considered? Will that be considered for the purpose of your mutuality principle? See, this was fine because both of them were for members only. These non-occupancy charges and common amenity charges were taken from the members, and that was for the benefit of the property of the member in the society, because they were taken from the member, and that was in respect of the property of the member in the society. The question was on that transfer charges which was being taken from the buyer who is yet to become a member. So here the key observation was about the transfer charges. If you see, students, herein, if for convenience part of transfer charges were paid by the transferee means buyer, they would not partake in the nature of profit. They will not be considered as profit. Why it will not be considered as profit? As the amount is appropriated only after the transferee was inducted as a member. This is a key word. The amount is appropriated or applied only after the transferee was inducted as the member. So this is a key point, students. Fine. Non-occupancy, students, I have already told you which is what you mean by that, and it is utilized for the common benefit or the facilities of the in relation to the property belonging to the member, and also the common amenity fund to meeting up heavy repair and to ensure hazard-free maintenance of the property of this society, which ultimately will benefit the members itself. Fourth point, you can just skip it. You just remember the first three one, very important, and can be there in your examination. So just be very careful on this part as well. Issue arising on raising of the finance. ITC Limited, convertible debentures, students, the convertible debentures which has been raised, whether that convertible debentures which has been raised, can that be considered like the company ITC Hotels has issued a convertible debentures. When it has issued the convertible debentures, it has incurred expenditure on issuing that convertible debentures. Therefore, the question came up was whether the expenditure which was being incurred, will that be allowed as deduction? Whether the expenditure which has been incurred, will that be allowed as a deduction? And it was being held that the expenditure incurred on the issue and collection of debentures will not be considered as a capital expenditure. Why it is not considered as capital expenditure? Because had it been for a share capital, for raising the share capital, if I am incurring an expenditure, then there is a judgment of Supreme Court in Brook Bond India Limited, wherein it is very clearly spelt out that this raising of share capital, expenditure incurred thereon, is capital nature. The reason is quite clear, students. Share capital is permanent, whereas debentures, loan, are not permanent. So therefore, primarily to raise a, but still somebody will argue, but sir, that convertible debentures has been issued. Tomorrow this convertible debentures will become share capital. So don't you think that even this would be permanent tomorrow? But the issue is, at the time what was issued, for which the expenditure is incurred, we are only supposed to look upon to that. So what was been issued was a debentures, and for that if you have incurred the expenditure, the court has held that this expenditure will not be considered to be capital nature. Although I must say there are contradictory decisions as well, which has said that tomorrow the debentures will become a share capital and therefore it will become permanent, and hence the expenditure which is incurred will be considered to be capital in nature. So there are contradictory decisions as well, but still if the question comes in the examination, go with ITC Hotels Limited. Berger Paints Limited students, Supreme Court. Share premium, will it form part of the capital employed or not? See, when the company, this is a case of 35D, where a company issues a share capital. So when the company issues a share capital, at that particular point of time, the deduction under section 35D, we are talking about deduction under section 35D, is 5% of cost of project compared with 5% of the capital employed. So this is what it is, and thereafter lower of the two, sorry, it is higher of the two in the first comparison, higher of the two, and whatever is the qualifying amount arising from this, that qualifying amount will be compared with the eligible preliminary expenditure, and of that eligible preliminary expenditure, lower of the two, meaning thereby this qualifying amount compared with the eligible preliminary expenditure, lower of the two will finally become the qualifying amount, on which 35D deduction 1/5 of that final amount will be allowed to you as deduction. So here the question was about the capital employed. See, capital employed as the definition goes, share capital plus long term borrowings. Share capital plus long term borrowings. This is what do you mean by the term capital employed. So whether the share premium amount, will that form part of your capital employed? To that the Supreme Court said no. Very important judgment. So whether share premium will be what? Will be part of capital employed. This is the issue under consideration. And as I told you, the answer is no. So here if you see, in the case of the Berger Paints India Limited, 2017 Supreme Court, what it has to say? Quickly have a look. The SSC is a company engaged in the manufacture of paints. For the relevant AY, the SSC claimed deduction under section 35D of a sum representing share premium as being a part of the capital employed. The said deduction was disallowed by the AO. Whether premium on subscribed share capital is a capital employed in the business of the company under section 35D to be eligible for a deduction. Now, primarily students, this is a provision, whatever I have just made a mention of it, I have given you the provision. Analysis, if you see, share premium not part of the capital employed herein. So they have said that the law does not say anywhere, that the share premium will be treated as a capital employed. They only say share capital, that's all of it. Share premium has not been mentioned at all. So the first point is, the law does not provide that herein, that if the intention of the legislature to treat share premium as being capital in the business, it would have been explicitly mentioned. This is your first point that you are supposed to write. Second, they have made a reference of the ROC return. In that ROC return, when we use the term, when we give the breakup of issued share capital, here we do not include the share premium. So when we give the breakup of issued share capital, share premium is out. And the last one, students, herein 78 reference that we all know, this is of the old Companies Act, that the share premium amount has to be kept separately. It cannot be used at all. Like share capital amount can be used for the purpose of your expansion of business and all, but share premium amount can never ever be used. In fact, for dividend also, to make the payment of dividend, nothing done. you cannot use the share premium account, and this is the reason why 78 also puts the bar. So therefore you give the 3 reasons for it. Number 1, in 35D the law does not provide it explicitly. If the intention was to include in the share capital share premium, it would have been provided explicitly. Second reason that you are going to give would be the reason of the ROC. So you will make a reference of the ROC. In that reference you will say that the breakup of the issued share capital does not include share premium, and the last one would be the reference of section 78. This is what it is. On that, students, there is this judgment of Sri Rama Multitech Limited. Sri Rama Multitech Limited. Now students, in this particular judgment of Sri Rama Multitech Limited, here just we have gone with the first judgment, Henkel Spic Limited. Henkel Spic Limited. So this judgment is just a bit extension of that Henkel Spic Limited. What is this extension in this case law? The extension in this case law is, what has happened was that the SSC here, SSC in this particular case, what they did was a classic scenario. Here, in the year in which the company will make the allotment of the shares, in Henkel Spic Limited, the allotment was not done and the interest got accrued. In this particular case law of Sri Rama Multitech, the allotment of the shares was done. So what happened was, the share application money along with the interest got received to the company. The question therefore was whether that interest income, will that be charged under the head IFOS, or whether it will be reduced from what? From the share issue expenditure. This is a landmark judgment, students. Very important judgment, again expected in your exam. Whether it will be charged under the head IFOS or whether it will be reduced from what? Reduced from the share issue expenses. So in this context, the judgment that was being given was that, look, this interest income which has arisen is not on any independent investment decision of the SSC. There was no independent investment that was being made on which this interest income is arising. This interest income essentially is arising on account of what? On account of the issue of shares. So the interest income is linked with what? With the process of the issue of shares. In the process of issue of shares, there was an expenditure which was been incurred, and accordingly the income which has arisen in that very process will also to be adjusted with the expenditure, and the net of the expenditure is what would be considered for the purpose of deduction under section 35D. If at all 35D we are talking, here 35D was not there. Point was that the AO wanted to tax this interest separately as IFOS. SSC wanted to reduce this interest with the share issue expenditure. The Supreme Court said that there was one judgment of Bokaro Steels Limited as well, and they went with that concept, suggesting that this particular Supreme Court judgment, in that trial run, some income was earned by the SSC during the trial run period, and that trial run period, the income which was being earned by the SSC was being adjusted against the trial run expenditure, and the net expenditure was only capitalized with the cost of the asset. So similarly here also, in the issue of shares, if there arisen an income which was linked with the process, which was linked with this process of what? Process of raising the share capital, then that particular interest income will be adjusted against the share issue expenditure and will not be taxed separately. and will not be taxed separately. So very important observation coming from this one. I shall warn to all of you with one ICDS 9, which is on the borrowing cost. Are you aware of that? In the borrowing cost ICDS 9, they have clearly said this. ICDS 9. What is said in ICDS 9 is that interest income during construction period shall be charged under which head? Shall be charged under IFOS. So this shall be charged under the head IFOS. But here it is not of interest income during construction period. This is about what? ICDS 9 will not apply to this interest income. Why? This is interest income arising on account of issue of shares. Arising on account of issue of shares. So ICDS 9 was only for interest income during the construction period. So this is not supposed to be considered. I have made the header, students, for your benefit. You will remember these headers. I have given you the entire aspect of this judgment, and this is what this judgment is all about. Now on deduction, students, this is PGBP deduction. Now they are the deduction which I have been repeating this in the class many a times. So there is no such, they are all important judgments because they have not been targeted. IBM Global, students, there were 2 points. Be careful, students, there were 2 points in IBM Global. One was whether the expenditure is capital in nature or not. This was issue first particular point. And second was whether it is for the purpose of business and profession or not. So this was the first area of discussion, and second was whether this expenditure was for the purpose of business and profession or not. So here the SSC wanted to share the customer database. So there was a, I think we have already dealt with it. See, the difference was use versus for acquisition. What the SSC has done? Had he used the database? Is he paying for using it or for acquiring it? If it is for acquiring it, it means what? You are taking the asset back. You are getting the asset. So if you are getting the asset, then in that case it's a capital asset coming in, and therefore it will be a capital expenditure. But here he is not paying for acquiring, here he is paying for using. And so far as the second point is concerned, payment for obtaining trained and skilled employees. So here the payment has been made towards the trained and skilled employees. So accordingly, in this regard of the foreign JV partner, some skilled employees, I wanted to take it in my payroll for my own company work. So of that, I've given a lump sum amount to that foreign company. So this was equated with what? Saving of training expenditure. To obtain a skilled employee, if you are making a payment to your JV partner, you are paying for its training expenditure, meaning thereby to pay this amount as good as you have saved what? Saved for the training cost. So that is also one of the observation given in this case. Rest of it, it's all like you can easily get hold with this. This is also very important. Honda Seal Cars India Limited. Here, students, the royalty was being paid lump sum by the Indian JV company to its Japanese counterpart. Now, this entire payment was for what? The technical collaboration agreement which was being there, the foreign company will give you the technical support for setting up of the factory in India, setting up of the plant in India. Also, the technical know-how would also be given for manufacturing and all. So for this, the royalty amount is to be paid. Question therefore was whether this royalty amount that was being paid, will it be allowed to you as deduction? So the Supreme Court said that this is for the purpose of commencing the business. How to do the business is for what I am making the payment to my JV partner. This is not for your regular operations that you are already doing, that for that you are making the payment to your JV partner. It is for setup of your business that the payment has been made, and hence it was being considered as what? As your capital expenditure. This is also very important. So here the new business had come into existence, so the payment is in respect of what? New business, and for which the agreement provided for technical know-how for establishment of plant and machinery, so as to bring in existence the manufacturing unit for the product. So that manufacturing unit of that company comes into existence. Manufacturing unit of the company comes into existence. Then thereafter, if there would be a termination of agreement, what does it imply? It implies that if supposing there is a dispute and the agreement between the Japanese company and the Indian company will terminate, what does it imply? Do you know what is that? The plant will get shut down. You cannot continue further, primarily. This is what the clause says. So it was definite. This is also a very important point. The termination of agreement would mean termination of JV, and there would be no further continuation of manufacture of product. So that is what they have clearly spelled out in this case. And this agreement provided what? The SSC with the enduring benefit. Enduring benefit is the third particular point. And in all these 3 points, that the payment was for the purpose of technical know-how for manufacturing or setting up of the plant, to bring in existence the manufacturing unit of the product. If there is a termination of the agreement, this will lead to termination of the joint venture. And finally, the agreement gave the SSC the enduring benefit. And in all these 3 points, students, we will say that the expenditure, which is royalty, is capital in nature. TVS Motors also, we have been discussing this particular point time and again. This is how the things are. So primarily this is all in your part A, which I have done with all of you. Part B, students, I will be taking across in the next particular session. So here, if you see, this is how it has become. Entire case laws that we have dealt so far. So if I have to just go back, let's see if we can recollect. Henkel spec, allotment not done, interest accrued. UCO bank, remember that. Registrar, in his account, the amount was being deposited and the interest was being accrued. Chennai properties classification, PGVP, IFHP, again PGVP, IFHP, all these are PGP, IFHP. This is a typical case. Interest of 28, it is for accretion of compensation, whereas interest of 34 would be for delay in payment. Manipal, contract of service versus contract for service. Some terms of the contract was being analyzed in this very case, isn't it? Non-compete, not to do private practice. Avenue super chit dividend, the difference part. What is a game? It is about the borrowing. What do you mean by the term debt incurred or money borrowed? Is it for that? If the answer is no, then it is not interest. Kotak security technical service means what? Means service of specialized nature, and hence if the payment is in respect of standard facilities, then in that very case it cannot be considered as a technical service. Ajmer, that's 2 terms, SDLC and wheeling charges and all. One is yes, another is no. Director Prasar Bharati, agent of Doordarshan, in that case commission which has been paid to them, what it will be. First of all, they have said that they are accredited agent. Secondly, the agreement used the term agent, and more importantly, the entire amount was being paid. The agreement allows the agent to earn higher commission if it provides what? Provides a higher business. So going with this terms of the contract, it is clear that there is a principal agent relationship that exists, and hence the TDS is required to be deducted under section 194H. DIT international taxation, we have talked about whether that reimbursement amount paid by the agent to its principal, will it be considered as a business income or your FTS? This was the issue finally being decided in this particular case. KL and Agrotech, primarily waiver of that particular loan, including that interest amount. Double jeopardy is what you need to remember, double jeopardy. So if you are waiving, if you're not allowing the deduction of the interest, you will also not consider the interest income, because 41(1) requires that the expenditure or the liability should have been allowed to you as deduction. So if no deduction has been provided, you cannot consider that particular amount as your income. Mahindra and Mahindra, waiver of the loan amount, which we have seen, and loan amount, sine qua non is what? Sine qua non is that there has to be a deduction of the expenditure. So unless there is a deduction of the expenditure, loss or trading liability, the waiver of loan will not attract 41(1). In this case, the SSE has not taken the deduction of loan. Also, he has not taken the deduction of interest. What deduction that he took was only about the depreciation of that particular plant and machinery. So therefore, the condition of section 41(1) was not satisfied. Apart from that, 28(4) where also was being raised as per 28(4) whether this amount will it be considered as the payment towards what? Towards the non-monetary benefit, and the answer is no. Non-monetary benefit requires the case of the either in the form of the perquisite or the benefit from the business, which should not be in the nature of any money. This was a clear-cut case of a non-monetary benefit, and hence primarily this is a clear-cut case of a monetary benefit, and hence it was not chargeable also under section 28(4). Thereafter, Sindh and Venkatesh premises mutuality, transfer fees. After that, which is what else? After transfer fees, what was the next one? Transfer fees. Thereafter, one more point. Make it fast. What was that next particular point? The non-occupancy charges. Perfect. And the third one more particular point was that maintenance charges for which you have taken that particular amount. So all the three, you have applied the mutuality on transfer charges. If it has been paid by the buyer, then it will be appropriated after he has become a member, and hence it cannot be considered to be a profit. CIT versus ITC Hotels Limited, Berger Paints. In this case, share premium, Rama Multitech Limited. I think all of you are aware of this now. So we have dealt with this entire thing, students. So now the second part, which I'll thereafter will kick off. I'll do the remaining particular judgment. But see, by virtue of revising this way, it becomes easier to remember. Revise this particular way itself. Did you got this one? See you then in the next part. Thank you.